and I welcome the media fraternity on the Union Bank's financial result for the second quarter that is ended on 30th September 23. I know we have called you on a weekend on a Saturday morning. I thank you all for coming here today. We all understand the economy. The media understands the economy much better than what we are. The Indian economy is quite resilient, and but there is global uncertainties. The geopolitical tensions, the external concerns are still there. We have got inflation. Inflation is still a big problem for all of us. But our bank's financial and business results continued the momentum what we showed in Q4 of last year and the current year, first Q1 also, and we have got better results in terms of profit, asset quality, capital adequacy, among others. During the quarter, our bank successfully raised equity capital of 5,000 crores via the QIP on August 25, 2023. This is one of the largest equity capital raising program in the TSB space in the recent times. This demonstrates the continued faith of the investors on the bank's growth trajectory and profitability. During the quarter, domestic rating agencies have upgraded their outlook on the bank's Basel III compliant bonds, while CRISIL, ICRA and India Ratings upgraded their outlook from stable to positive. CARE upgraded their rating to AAA with stable outlook. Quite recently, the bank has undertaken one of the pioneering initiatives by launching Union Bank's first ever women's hockey team. On the inaugural day, we had a friendly match with Indian Railways. This resonates our commitment towards empowerment, inclusivity and community engagement. Let me now give you a brief background and the highlights of the bank's performance for the quarter ended September 23. The total business of the bank reached 19.85 trillion with a deposit base of 11.38 trillion and an advances size of 8.47 trillion. The total deposits grew by 9.04% and the credit grew by 9.5%. Operating profit of the bank for H1FY24 reached 14,400 crores with a growth of almost 19.8%. And we have seen good net interest income and good non-interest income growth during the quarter and for the half year also. Net profit almost doubled YoY to 6,748 crores. We are above our guidance with regard to NIM, and we are registering to continuously grow the NIM. We are today at 3.18% in the half year. RAM portfolio also registered a good progress in all parameters of RAM, whether it be retail or MSME or agriculture. We have done well. The robust growth we have seen is in education loan, which shows a growth of almost 50%. Gold loan showed a rise of almost 56%. Gross NPA has substantially reduced by 207 bips over last year and it is at 6.38%. Net NPA is down to about 1.3%. Provision coverage ratio has an all-time improved to 92.03%, bringing down the credit cost to 0.81. The ROA also is very good at 1.07%. We had taken a guidance to maintain 1% ROA by FY25, but we were able to do it in the first quarter of FY24 itself. Our CAR has improved to 16.69%, and then we had raised the QIP, as I already told you. We continue to enhance our digital capabilities by onboarding many customers on our digital platforms. Today we have got 24 million customers on the YoY platform. We firmly believe that the digital journeys will enhance further customer satisfaction and also translate into good business. We have rolled out many new initiatives like the CRC and the NPCs and the CRM Edge. Wealth management vertical has been created in the bank. We are driving market penetration whether it be in the form of sales or marketing or recovery through our subsidiary, the UBISL for business operations. We have also onboarded many external domain expertise with regard to CDO, risk officers, wealth management, and we will also be bringing in more heads of various departments so that we get external expertise. Looking ahead, we see a lot of opportunity in the bank in line with the emerging trends in India. We will remain committed on for the strong balance sheet, and also will stick to whatever guidance we have given to all of us during the first quarter of the year. With this, I conclude my opening remarks, and we are now open for interaction. Thank you.
RAM advances, but your large corporate and other advances seems to have some kind of slowdown actually. Yeah, can you explain that?
See, large corporate advances, majorly it will be on the whatever the rates what we are giving. It is more on the pricing which we are going to be able to generate, and basing on that only the large corporate advances are being there. We are taking a conscious call that low yielding advances, we are not much interested on that, and we wanted to grow with a little high yield cost. Despite all these things, our large corporate advances has shown a growth, a positive growth is there. But as you told, because the market, we have to also see that what is the assets available and what is the competition going on. Basing on that, we are taking call on that.
We are in fact having a very healthy and sustainable corporate book, I can tell you. We have grown by 3.5%, and if you see the corporate credit to the RAM, it's actually for 57.43. As the ED has also explained that we are morely concentrating on high yielding advances. But if you look at now, we almost have about 34,000 of undisbursed portion still on our books, and we will be able to grow the books during the current quarter and the next quarter also.
To improve the CASA.
No, CASA is, what we have observed is the CASA has been healthy. There is a growth in CASA, but the CASA growth we have seen in the individual CASA. So, but what we have seen is a little decline in the institutional CASA. CASA has, if you look at overall, the CASA deposit of the bank has increased by 4.45%, and the term deposit has increased by 11.59%. But we have seen muted growth, or you can say negative growth in CASA on the institutional sides. So, but the bank has taken lot many different strategies and methods to increase the CASA numbers. Like we have a separate vertical, we have come out with new different products for CASA penetration, and we have used the digital tools like the video KYC. We have put in relationship officers across our zones and ROs to see that the CASA numbers are increasing. Right now we don't have that thought process to increase the rate of interest. We will take suitable interest increase at the right time.
What will be your treasury profits, ma'am, during the quarter? Treasury profits during the quarter?
Treasury profit is 681 crores for this quarter, compared to 775 last quarter, 473 year-on-year basis, around 50% growth on year-on-year basis.
Sequentially, it has sort of fallen, right? Sequentially, it has slowed down.
Yeah, because interest rates have gone up drastically.
Right.
So that is the reason the stress is there in the interest rate as well as inflation. So treasury has to cope up.
Thank you.
Ma'am, RBI has increased the threshold for taking non-callable deposits from 15 lakhs to 1 crore actually. So what kind of impact will this have on banks actually? Gently wanted to know your views.
The bank is having its own policy of non-callable and callable. So it's not going to much impact. In fact, the bank is also now not into taking huge bulk deposits. So if you look at last quarter of Q2, the bank has not gone into taking bulk deposits. But I'm sure that this is not going to make a major impact on the bank. We have got considerable liquidity in the bank. And only if my advances grow to a great extent will I be taking deposits. But as I told you in the very beginning, I am concentrating more on CASA and on retail term deposit to bridge whatever gap I have in my ALM mismatch or in my credit.
From Easy Bank. My question is on the target for till the end of this year. Where do you see the net interest margin and credit and advances and deposits?
I had given a guidance in the beginning itself with regard to the advances. We said we will grow by 10 to 12%, and we are today at 9.5%. That's a growth that we have shown. Deposits, we said we will be at 8 to 10%, and we have done fairly well at 9.04%. NIM, we said it should be 2-3%, and we have considerably increased our NIM with 3.14 was last quarter. This quarter we are at 3.18%. We are sure that we will be able to protect our NIM with 3%. GNPA was we said about less than 6%. Today we are at 6.38. We have substantially brought it down by almost 207 bps. Slippages, that was guidance given was 12,000. We have done 5,404. That was a slippage for the H1. Gross recovery also we had given a guidance of 16,000 crores, and we have closed to about 6,900 crores for H1. So whatever guidance the banks had given to us, we have been able to achieve those guidance, except for of course the advances. And I still have 2 more quarters to go, and I'm sure that I will be achieving the guidance of whatever we have given.
Hi ma'am, Kabir here from Informis. Just wanted to know the share of unsecured loans in your total portfolio.
My unsecured loan portfolio of the total is just about 11,000 crores. And consisting, if I look at the portfolio of 8.47 lakh crore of advances, it's just about 11,000. It's a mini school one. It is basically my personal loans which I have given to my salaried employees, and also to a little extent towards credit card use. So my almost like 73% of my personal loans is to the salaried class.
Right, and just one more question on deposits, not on CASA but on term deposits also. Do you see rates going up in the system, not specifically to your bank, because we can see that deposits are lagging quite behind advances now?
Yeah, Reserve Bank of India has not raised the rate of interest, so it has not gone up. And whatever we have priced in September 22, that is the repricing that had happened in the last 2 quarters. I don't see any repricing happening, except that if the Reserve Bank of India again raises the rate of interest, only then it's a concern. But I don't find any need for the bank to raise the rate of interest right now. But as I told in the beginning itself, it all depends on the liquidity position within the bank, the way my credit growth is going to happen, the ALM mismatches, if at all it comes in, then only then I will be able to raise the rate of interest to take deposits.
So ma'am, the entire repricing has happened?
It has happened to a great extent, it has happened.
No, in deposits.
Yeah, deposit, that's all. Deposits it has happened.
Thank you.
September 22 is when I raised the rate of interest. So I have been able to reprice all of that.
Thank you.
Good morning, ma'am. This is Abhijit Lely from Business Standard. This is about the recoveries and the sale of any NPAs to the ARCs, splitting one to NARCL and another other ARCs. So, since you have quite a strict target of bringing down on the recoveries or the sale, what is the scenario?
I can tell you that during the quarter we did about. I can just give you a brief on all the various recovery methodology the bankers use. We did the ODS, that is a settlement, and through Sarfasi we have done quite a few of them. ARC sale we have done 4 of them we have done for this September Q2. And about 615 crores was the total amount, and 200 crores was the recovery in that. Major areas of recovery was through the OTS, where about 75,000 accounts were settled. Sarfasi we have done about 2,800 accounts we have done. NARCL we have done about 2 accounts. And the DRT settlement was to the extent of about 460 numbers. So NCLT was 1 account. So this is the various methodology that the bank can utilize for reduction of NPAs through the various channels.
In terms of OTS amount recovered, how much it would be?
The total ledger balance, if you can say, was about 830, and we were able to recover close to 100 crores.
In the balance part, what is really the targets? So OTS and
usually we give them a 90 days time for settlement of the total amount. So it may be happening during this quarter, sometime in the next quarter, as and when the OTS amount is due, that will come in.
okay, I'm done with my query.
Thank you.
Ma'am, my question is, given the current festive season, what is the kind of demand for retail loans that you are seeing specifically to the festive period? And another related question is there a kind of is this kind of a demand impacting the liquidity in terms of leakages of currency in the system?
Okay, I'll answer the first question. Of course, retail demand will be there. We have seen a robust growth in vehicle loans in the first quarter. Of course, 26% was the growth in our vehicle loan, and going forward, we will see good growth in my vehicle loan portfolio, and also in the education loan and the housing portfolio. These are the three things that I am looking at growth. With regard to the leakage of liquidity that you are talking about, liquidity, we have got sufficient liquidity with the bank, and I don't foresee any impact on liquidity, and I will be able to take care of the advances growth for this quarter at least with the liquidity that the bank has got.
Right. Madam, on your advances, you have slightly built on your guidance in the first half. So, what is your guidance for the second half, and do you think you will be able to make up for the lost ground in this, and what are the reasons you are so hopeful?
See, as we told, advances, we will be able to, Madam has already told that we are already having around 30 to 34,000 crores which has been sanctioned and which are in the disbursement stage, which are in the pipeline. We are already having it, which will be done when the project is going up. It is going up. These loans will be disbursed. So, absolutely no problem. We are sticking to the guidance, and we will be we will be exceeding the guidance also. Because now the credit consumption season has now started, just now began. This third quarter and fourth quarter will be always the busy season for the credit.
And madam, also about your asset quality, although you have improved significantly in the first half, but it is still quite high given the peers. And so, in terms of asset quality, can you give us some plan for your next couple of quarters? How do you plan to bring your asset quality? How do you?
As I told you in the very beginning that we had a guidance of reducing the NPAs to below 6%. The GNPA of course to 6%. We are at 6.38, and we have taken various methods now. For example, we have come out with a very good OTS scheme called the Samadhan scheme, and we will be able to do substantial numbers in that. Plus, we also will be looking at, there are restructured accounts with regard to agriculture. That because of various reasons, agriculture restructuring has happened, and so we have also come out with a scheme to reduce the repeated restructuring accounts in agriculture also. So we have got strategies, we have got the know-how as to how to reduce it, and in the next quarter you will see substantial decrease. I am talking about this quarter itself. You will see a substantial decrease in our GNPA numbers, and I think our new ED, Mr. Rudra, will be able to substantiate further on this line.
So, whatever the target we have kept for the current financial year is a 16,000 crore of recovery. Out of that, approximately 7,000 crore already we have done. So, this additional 9,000 crore of recovery will be affected in the second half of the current financial year. In addition to that, one good thing which is happening in the asset quality side, our slippages has come down drastically over a period of time. Now we are approximately having 2,800 crore of quarterly slippages. With these slippages and recovery which we are targeting, we will be definitely be able to meet what the industry level is there. Definitely we will be able to meet in the current financial year. And some of the strategy for recovery which you have already, as Madam was telling about the agriculture loan, as you are well aware of that, key Maharashtra and southern part of the country had lot of agricultural issues, especially related to the climatic condition of the country. So to ease out the problem of the farmer as well as the recovery of the bank has come out with a beautiful policy which we call as a repeated restructuring. The long back the loan was given but still outstanding. So there we are going further aggressively and giving some OTS proposal to customer, and the response of the people is very good. We may be the pioneer in that in the entire banking industry which we are doing. So definitely this quarter our asset quality will improve substantially.
Madam, you plan about what, I think 5,000
We have already raised 8,000 crores is what I have to get out in the equity front, and the remaining was to be coming from the Tier 1 and Tier 2 bonds. So out of that I have already raised 5,000 crores, and the remaining 2,000 crores is what I need to raise in the equity front. We hope to raise it during the year. By the end of this calendar year, we will be able to raise it.
6,000 crores of write-off. What is this due to?
See, these are accounts which have been fully provided actually. That is how we have taken the write-off. This is a market, this is an industry practice. Last year we did about 18,000 crores of write-off. So in this quarter we have done about 6,000 crores. And so going forward also we will be writing off certain accounts which has been fully provided in our base.
These are Agri
It is in various parameters, various like MSME or agriculture or the large corporate, any kind of a thing we will be able to write.
These are these are basically the technically written off. These are not written off completely from the books of the bank. From primary balance sheet it is removed, written off, but it is still continued at a branch.
Not only that, the recovery process will be going on in these accounts. We will be recovering from these accounts also. Only for the balance sheet purpose, we are just writing up. And to add to the corporate, this is one of the reasons because around this 6,000, 7,000 crores has been written up. Otherwise, our advances would have been up by another 1%, which we will be meeting the guidance.
Any provisions made against for wage revision?
We make the provisions, wage revision at 15% we have been making. Every month we do about 110 crores of provisions for salary increase. And infrastructure, power, steel, many industries we have this.
And you were mentioning about having enough liquidity actually with the bank, So how much of excess SLR you have? And
We got close to about 50 to 55,000 crores of excess XLR. December.
Another number QIP or what is the?
It's a QIP only that we will be raising.
And 81 and 82?
We will be raising it. We have not decided on because assignment because these will be by replacement only.
How much is maturity?
2,100.
2,100.
In terms of MCLR, is it complete?
In EBLR it is complete. In MCLR it is not actually complete. There was an increase of 250 bits. We have done about 130 bits the increase being up.
So how much more you could go actually? Yeah.
See, MCLR repricing that you are talking about, I have a book of 50% of my book is in the MCLR, and that's about 2.3 lakh crore. I have done most of them. 1.2 is yet to be repriced. So that will be done during the current quarter and the next quarter also.
Further to supplement what Madam said, see MCLR, the entire transmission of repo will not happen. If you go back to when the MCLR was only there, at that time that was the concern why the MCLR when the rate is going down, MCLR is rate that reduction is not transmitted through the MCLR. Because basic concept of MCLR itself is saying about the marginal cost. So it will not happen in future also to transmit entire 2.5% to MCLR, which has been done in the EBLR way.
this.
91 is
Floating.
floating and 9%.
So like it's like fixed, it is almost being phased out.
Yeah.
Incrementally all your loans.
Give me the mic.
So what will happen?
Now, going forward, I think everything will be floating. That's
Floating,
what
yes,
is-
yeah. But what I was saying is, asking is within floating, like now we'll have to also link it to EBLR or your loans. Like,
No, that's what madam was telling. 50%, around 50% still under MCLR.
Oh,
40% EBLR and 1% other.
No, about EBLR and
And
MCLR. MCLR is about 50% of my portfolio. The remaining is EBLR and TBLR. No, on the asset side, on the liability side, not much except for the fixed deposit conversion to the digital channel. That is what we have seen. And the other, for the deposit sides and the liability side, we have already come out with new products, but then that will be pushed during this quarter and the next quarter also.
How much will the government stake come down to?
It will come below 75%. Now it is at 76.98 is what it is. So if I take another 2,000, it will come below 75,000. That's a requirement of SEBI.
Questions. How much of the target is 1 million transactions per day? So if you could give a sense on how many transactions are happening CBDC on a daily basis.
Already launched retail CBDC and in the process of launching wholesale CBDC also. As far as the RBI target, earlier target, this is the revised one which they have come up with. Now that the growth is happening, we have actually exceeded the targets which were given by RBI both in terms of number of users onboarded and in terms of number of transactions which was given earlier. Now of course they have raised the target to a level where it should become a transaction which will become comparable to earlier days of IPS. We are quite hopeful that after launch of wholesale CBDC and the drive which we are taking, we will be able to meet those transactions.
What is the current
Last quarter, what is this write back on account of non-performing investments? Is there any kind of chunky?
Tina? What is it?
Right back on
Investment.
NCS.
Yeah, which has been converted into standard assets. So we have to get a right back on those. Whatever provision made will be returned back.
Any kind of particular account, chunky account that has come in actually?
No, it is on account of upgradation of those accounts. No?
Okay.
Like whatever the severe restructured investments, that has converted into standard assets. So whatever provision held on those accounts, it has been, which is Jyoti restructured one small account, 101 crore. 101 crore.
Which is this account?
Okay, leave it now.
There are small and tiny accounts.
We were so particular about the account.
Such a huge amount is. What about the cost of capital? You are looking at growing only between 10 to 12%. So isn't there a cost of carry? The cost of capital would go up, and wouldn't that sort of affect your ROE?
This capital were raised for two purposes, of course. One for SEBI requirement, and the second, of course, was for growth requirement also. You have seen that now the CAR is also improved to 16.69%. So the bank will be able to take more growth into the so that was a requirement. And first two quarters, the advances growth was muted, as we have already told you. But we would like to say that substantial increase in the credit portfolio will be there in this quarter and the next quarter. Now that the festive seasons have started, and as also ED has explained, the Q3 and the Q4 are the quarters where really the growth happens in the economy. So we are also looking at a good growth, and we not only that we have given guidance of 10 to 12%, and we will be able to substantially move ahead of those numbers actually.
Given that most of the banks across are now 15% and above capital adequacy, is there a goal you are look that you will maintain on an ongoing basis? Any floor that you will maintain so that you have enough buffers to either absorb unexpected shocks or even to increase the pace of credit mobilization?
No, now this one is about 9% is the regulatory capital. Usually what all of us say is, if you maintain, but all of us take 12% to 13% is what the CAR we take more than the regulatory capital. So of course, we will maintain it above that 12% is what we feel. Thank you for coming.